in Motilal Oswal's studio. I am Reema Tendulkar. With me is Hormuz Fatakia, and it's another range day. 7th one now for our markets. I think last Monday was the only big day where we had a directional move, and after that we've pretty much been marking time, treading cautiously, locked in a tight trading band. Broader markets, though, are faring much better. So once again, mid-caps are outperforming. In fact, this week, while the Nifty is just up close to about 0.3%, the mid-cap index has gained close to about 1.6% higher on the mid-cap index. The star sector of the week has been auto. The Nifty auto index has a gain of 4%, and that's courtesy a 7% gain in Tata Motors, all come yesterday and today. And then you've got M&M. Today, quiet, M&M, but the start of the week on the back of the numbers was very good.
The other auto name that's doing well for itself is Tata Motors, right? It was doing well for itself yesterday. Even today, Tata Motors extending its gains from yesterday's trading session. So good going for the auto sector. But of course, the index, as Reema was just mentioning, has taken a bit of a pause and moving along the sidelines. The focus has been on specific stocks, particularly earnings reactions, sector-specific stock reactions, and that is what has kept the momentum going within the broader markets, although the index has remained stuck in this range. And earnings reactions are plentiful today as well. Niva Bupa is one of them, 11% higher on that stock, the top gainer on the Nifty 500, as has been the case right from the start of the trading session. The other one, Welspun Living, was doing very well for itself yesterday, is doing very well for itself today as well. Another 7.5% higher for Welspun Living, so good going for that stock as well. And of course, all of these apparel makers that were doing well for themselves yesterday are continuing that trend in today's session as well, be it the likes of KPR Mills, be it the likes of Gokaldas Exports. KPR Mills is up 7.25%, and Gokaldas Exports too was doing well, was up around 4.5 to 5% in today's trading session. So good going for all of these apparel makers, but it is a big earnings day today as well when it comes to results, because a lot of these sector leaders are going to report results, Reema.
Indeed. I think you've got Asian Paints, you've got Titan, you've got Pidilite, you've got L&T. These are amongst the larger ones reporting numbers. Then a whole host of mid-caps too will be coming out with their numbers. And not to forget, this is also the Nifty weekly expiry. It's Thursday, so you'll have the Nifty weekly expiry as well. So talking about some of the earnings reaction, on the way down, you've got Satin Credit Care. So that's got a cut of nearly about 2.5%. Dabur continues to trade with cuts 2.5% lower. Since the start of the year, Dabur has lost nearly 7.5%. Unexpected lines a weak quarter. Sonata Software, where the IT services business, what they call international, has been subdued. We'll get chatting with the management for more on that. UPL too has a cut of nearly about 1%. But on the way up, it's Symphony. So let's straight away get chatting with Symphony. Very strong quarterly performance. The net profit is surged 65%. The revenue was higher by 47% on a year-on-year basis. And the board has also recommended a final dividend of 8 rupees per share. Rupesh Shah, Managing Director of Corporate Affairs at Symphony, is now joining in on the show. Mr. Shah, thank you very much for joining in. Now, this quarter that we're currently in is typically the strong quarter for you, given the summer season. You've indicated that it's had a strong start, but the momentum has been mild due to the erratic summer. And that's something even what Blue Star seem to have indicated when they talk about their unitary cooling segment, that April has been a bit subdued compared to earlier expectations. So tell us how April has been and what can we expect in the current quarter in Q1? Will growth rates be similar to Q4 or better?
Yeah, so March quarter has been phenomenal. So summer started with bang. Of course, post-March, April is subdued so far, mainly on account of erratic rains and not so much supportive weather. However, due to variety of our initiatives, including adjacent category, our decent penetration across the channel as well as rural and semi-urban area, relatively we are doing better. However, YOY certainly so far, it is subdued. However, as it has many times happened in the past, still depending upon the region, 7 to 11 weeks of the summer have to go. And it needs 7 to 12 days of consistent heat in any region and product gets sold out. So we are keeping the finger crossed.
But when you say April has been subdued, are we looking at degrowth on a year-on-year basis? To what extent? And even if things recover in the month of May and June, what could you end the quarter with? given the slow start?
Yeah, as I say, it is subdued in the sense YOY. April 24 was exceptionally strong. In fact, it was historically strong. Vis-a-vis, it is subdued, that is lower. However, we have repeatedly seen in the past, in the weeks to come, in such a large country with many, many territories, if there is 7 to 12 days of consistent heat anytime during next 7 to 11 weeks, it takes care of it. So
Mr.
we are
Shah,
all losing the nerves, and we are keeping the territory-wise temperature and sale and our variety of initiatives quite vigilant.
but are you witnessing something of that sort on ground, Mr. Shah, when it comes to, you mentioned consistent heat for 7 to 12 days that will take care of the subdued start that you've had for the month of April? We are almost into the first fortnight of May now. Have you witnessed some change on ground when it comes to your demand scenario as well? Because even take Mumbai, for example, we are currently subject to unseasonal rains as well, and the weather has just taken a complete 360-degree turn.
No, so is the case in Ahmedabad, that is our headquarters. So is currently the case in North India as well as Central India. However, say in April, in whichever part there was a consistent heat of 7 to 10 days, there were some territories. It was completely sold out. My point is, summer many a times goes right up to second week of July. Still, we have 7 to 11 weeks of summer, especially Northern India, Western India, Central, and East part. And many a times it has happened in the past. There has been early summer and there has been early rain, and vice versa. So my point is, if it happens, we can very well reverse, and sales can be intact. We have to keep the finger crossed.
But in that case, Mr. Shah, have you set any targets for FY26? Because for FY25, you saw a very sharp margin expansion from 15, you zoomed up to 20. Do you expect to remain at 20 in FY26 as well?
Of course, we have our own, not only quarterly, but quarterly, monthly, territory wise, and model wise target. But that is not for public domain as per our IR policy. And as far as the margin profile is concerned, we very much expect to maintain current kind of increased margin profile. We endeavor towards that.
What are the drivers for the increased margin performance? I think last time you indicated that those 17 new products that you launched, SKUs, were margin accretive and they'd seen very strong demand. So what, to your mind, are the key drivers behind the margin performance in the current quarter? And you're saying it's sustainable.
So one, of course, launch of 17 new models. They have received overwhelming response. We have also in pipeline many new other models for year to come. Number two, economies of scale. Also continues value engineering, as well as our decent penetration in rural, semi-urban, digital channel, and model train, apart from general trade. And during the year, apart from our core household air cooler, adjacent category, LSV, geyser, etc. have also contributed decent amount of sales. And that will continue and should witness further traction.
Just a couple of questions, if you could help with numbers. What was the contribution of the adjacent categories like geysers, etc., in the current quarter or FY25? That's number one. Two, last quarter you had very high unbilled advances, 150 crore at a record level. Is there a number in Q1, in Q4 that you could, share us that? And third, there were also provisions towards an e-commerce customer. And you had, I think, made a provision of 46 crore. What's happened on that front?
Okay. One question, many answers.
Yeah.
All right.
So first is geyser, the adjacent categories in the sales.
That's right. So adjacent category put together have contributed almost 17% of sales. And when I say adjacent category, it includes tabletop, it includes kitchen cooling solution, large space ventilated cooling, etc. And these are the products which are sold round the year. And in addition to that, counter seasonal, that is geyser as well as spare sales. So they have collectively contributed almost 17% of the sales and huge potential. They are in a way non-seasonal. Your second question was about provisioning on our
The e-commerce customer.
e-commerce customer. So the legal updates I have, we have succeeded in a very short time to get the power of attorney and have registered the mortgage in our favor on 13 valuable properties of that company, their promoter, as well as associates. So we have power of attorney and mortgage has been registered. In addition to that, there has been court approved settlement agreement. And if the recovery doesn't materialize, there is a bailable warrant against the promoter. So we have taken in a very short time, very stringent action, and we hope sooner or later some recovery should materialize. But we'll update on that as soon as we receive it. So far, we have recovered small amount, that is 50 lakh rupees.
50 lakh out of 47 crore, is that correct?
It was write-off as well as ECL provision, all put together 50 crore in previous year. Now, whatever recovery will happen, that will be as an exceptional gain because year has changed.
Sure. And
So
one more question.
already booked as an expense.
Yes, I remember that. And one more question. The unbilled, I think the sales, I think it was 150 crore in Q3.
Correct. So as we had informed, large part of that was related to new models. And most of that billing happened in March quarter as it was guided. And that is also one of the reason of substantial growth in March quarter. As far as 31st March is concerned, I don't have the exact figure, but we had decent amount of advances lying as on 31st March, by and large to bill in June quarter.
What about your international business, Mr. Shah? Because generally it tends to be the high margin one, right? Is there a specific geography that you are targeting when it comes to growth? And coupling that up with the other one is that your divestment plans now in Australia, be it Mexico, are you planning on exiting those markets? Are you divesting some stake over there? And you can answer this and then I'd ask you my follow-up question for that.
Sure. So as we announced on 12th of April, we have decided to monetize and divest our Australian business and Mexican business. The purpose is so that we can focus and use management bandwidth on much more profitable, growth-oriented business segments within the country as well as exports directly from India. So that is as far as the update on those two companies are concerned. We have already appointed the investment banker and work has just begun in that respect. As soon as there is any major update, we will of course announce suitably. Coming to other international business, GSK China as well as Symphony Brazil, which is more like a trading subsidiary, but both have performed phenomenally well. And GSK China has been a classic turnaround story. And in fact, we were compelled to take an impairment on its equity as well as part of the loan because of its strong financial. In the current year, those impairment has been reversed and written back. However, to add to that, because of climate technology's past performances, as per accounting standard, auditors advise us to make an impairment on climate technology amounting to 50 crore, which has been already done in current quarter and as a year. But it's more about the notional accounting entry.
Mr. Shah, just to get back to the disinvestment bit, do you expect that disinvestment plans to materialize in FY26? Do you expect to complete that exercise by then?
That's what we intend to do. But as you know, it's a major exercise and we wish to wrap it up ASAP. but difficult to give the specific time frame.
Okay, thank you very much, Mr. Shah, for joining in, and wish you all the very best. We will get into a break on that note. We'll come back and discuss commodities on the other side with Manisha Gupta.
Welcome back. Well, continuing to remain at that 24,400 mark for the index, and a couple of names from the broader markets that have sprung up in today's session. HCLTech is one of them, 7% higher on that stock. That is among the top gainers on the Nifty 500 in today's session. And the other one is Vishal Mega Mart, and over the last couple of sessions, that stock has been unstoppable as well. That too was up around 6%, 7% in yesterday's session. That's up another 6 3/4 in today's session as well. Is Vishal Mega Mart, after some strong results, some positive brokerage commentary that came in as well, and brokerages like Morgan Stanley expecting the stock to go up to levels of 160 as well. So strong showing from Vishal Mega Mart. But moving on to the commodities space, then Manisha Gupta is joining in, and today the glitter is back on gold, Manisha.
It is, and that's because all these corrections that we've seen come in for gold have been short and few and very short-lived as well. So when you look at the gold prices, while we did see an all-time high of $3,500 an ounce, we did see a correction up to $3,200 as well, but we are trading back at around $3,400 at this point in time. And with those kind of levels, you are up by 30% in this year until now, and up at nearly 45% when you look at the last 12 months as well. Well, if you look at the markets itself, there's a lot of uncertainty when it comes to US and China trade conversations, and that is where the gold prices are taking their cues from. Apart from that, it also has to do with the kind of US Fed meeting statements that we saw. While there has been no interest rate change, and this is the third meeting in this year, but the markets are concerned about unemployment and inflation, but not to a level where you have to see an increase there. Apart from that, there also is a strong global investment demand that the markets are looking at. The ETF buying across world is near or at record highs, also supporting markets. And then China also, to its commercial banks, has given an added quota for import of bullion going forward. The markets also are taking support from various mutual funds, ETFs and funds, and saying that they are adding gold as an investment tool for many of these clients. The one of those is Canada's fund Vatar Capital, which actually handles nearly $2.8 billion, says that they are putting bets on gold to lift returns for their investors going forward. The other important point I want to make is about the global central banks. Now, the buying there for the first quarter of 2025 has been at a 244 tons. Let me remind you that in last 3 years, every year, the global central banks have bought more than 1,000 tons in each year there. And this year as well, the expectations are that you could be looking at higher numbers. So when you look at China, well, April has been a 6th straight month of buying coming in from China. And with this, China is now holding 6.5% of its forex reserves in gold at the tune of 2292 tons. India has been a good buyer of gold as well. And with the kind of gains that we've seen at the end of first quarter of 2025, we have seen India's reserves in gold stand at 12% at 880 tons. If you look at the overall buying that India has been doing in last few years, has been quite on a stronger side. 2021, India bought after 6 or 7 years of not buying gold at all. But since then, we've seen 70 tons, 30 tons, 16 tons in 2023. Last year was 72 tons as well. So India has been buying, adding gold to its reserves. What the markets will watch out for now, though, to focus on upcoming events, one is going to be the US Treasury SECI meeting China top economic officials on 10th of May in Switzerland. And the second important one is on 11th of May itself. This is when there's going to be a 4th round of nuclear talks between US and Iran. So these are the two factors that the gold bulls will keep an eye on. In the meanwhile, the kind of decline that we've seen in dollar index also has been supportive for gold.
Thank you, Manisha, for that. I think we're getting visuals of the all-party meeting post-Operation Sindoor. In attendance were to be Home Minister Amit Shah, Defence Minister Rajnath Singh, BJP President JP Nadda and Finance Minister Nirmala Sitharaman. Congress Chief Mallika Arjun Kharge and Leader of the Opposition Rahul Gandhi are also in attendance. In this high-level meeting, we also have Mr. Owaisi, Chirag Paswan and many others. Get into a break on that note. We'll come back and get chatting with the management of Sonata Software on the other side about their Q4 earnings. Welcome back. As promised, let's invite the management of Sonata Software. The company's IT services performance was a tad bit subdued. The dollar revenue saw a decline of 6.6% on a quarter-on-quarter basis. And I think margins, too, were a bit under pressure. We have with us Sameer Dheer, Managing Director and the CEO of Sonata Software, joining us on the show. Thank you very much for joining in. Apologies, margins have gone up on a quarter-on-quarter basis. The top line, though, has corrected by 6.5%. Mr. Dheer, what happened? Was it the macro uncertainty towards the end of the quarter which impacted your revenues? And what can you guide for Q1? And what's the situation like?
Yeah, thank you. I think the results are in line with what we had anticipated when we announced our Q3 results. If you recall, in Q3, the later part of the quarter, we had headwinds in one of our largest tech clients. And we saw partial impact of that come through in Q3, but the full quarter impact came only in Q4. So it was much in line with what we anticipated on the top line side. And on the bottom line side, I think we had anticipated it will regain close to about 2% on our EBITDA line, which is, I think, what the results have come out around 1.9%. We have improved our quarter-on-quarter profitability. Just on the numbers, broadly speaking, I think the market is currently uncertain, as you're aware. We are seeing a sectoral trend. Our banking and healthcare business continues to do well because they are more regulated industries, so they are continuing to do well. The retail industry is under severe pressure given the tariffs discussion that are currently on in the US. So we are seeing pressure points in the retail industry. And the tech industry is doing well for us as well. So it's a little tale of two cities. And that's what the results reflect. Our largest client headwinds were fully picked up in Q4. And I think as we get into Q1, we think the pressure on the largest client will ease off. So we'll probably see flattish to slightly marginal growth up in that client as well. So overall, very much in line with what we anticipated. The results are not a surprise in that sense for us.
Okay, so if the large client is flat or is likely to grow, plus BFSI, etc., is going to do well, in Q1, the company should grow again?
Yes, we think we'll be back to growth in Q1, quarter on quarter. So we do expect to be back on growth trajectories. And
you've also withdrawn, I believe, your guidance of your aspirational guidance of $1.5 billion of top line by FY27?
We had given that as an aspirational guidance.
Yes.
I think that still very much remains intact. I think what we are doing is, and we have said this before as well, we want to be one of the top quartile growth companies, and that's pretty much remains intact. Given the macroeconomic market conditions right now, it's very hard to predict where the growth will or what growth numbers will hit in the next 1 or 2 years. So we're just staying that we will be a top quartile growth company as we move forward, and that's where our aspiration has been and will be.
Sameer, good morning. Thank you for joining in to talk a bit about your international business as well, right? Your margins recovered on a sequential basis, but even after that recovery from 14 to 16, you still remain below that 20% mark. Do you expect to get there in FY26, or would you still be happy if this 16 even becomes an 18 by the end of the year?
Look, our long-term aspiration has been, just to revisit our aspiration, is to be a top quartile growth company with a low 20s EBITDA. We were trailing at around 14%. We've come to about 16 now. We think sometime in the course of the year, we'll be around 18 to 20 mark. So this will be very much a defining year in many sense, FY26, that we will climb back to high teens and maybe even 20 marks. So we feel pretty good about it, but the macroeconomic uncertainties are still very much upon us. If market holds up to the extent we are thinking it will hold up, so I think 18 to 20% by the second half of the year is absolutely in the sight.
Okay, H2 margins 18 to 20% at the EBITDA level. On AI, I think you've said 97% of your workforce is trained in generative AI. You're pursuing some $34 million of an AI pipeline. How much will AI contribute to your top line, say, by the end of FY26 and then 3-5 years down the line?
Yeah, it's an interesting question. I think we're pretty excited about where we are on AI, and I think we believe with agentic AI has really come to life. So a lot of the deals that we are now pursuing definitely have an element of agentic differentiation, and that's really helping us. As you probably know, we announced a very large deal win a couple of weeks back, which is a $73 million deal, and that was really predicated on the whole agentic AI differentiation. So we think as we move forward, the AI differentiation is getting embedded into all our deals, and then that's what will the trend go forward as well. From a long-term perspective, I think we've called out in about 3 years' time by FY28, maybe FY29, about 20% of our revenue should be AI impacted or AI influenced. That's how we think this will go. And I think the deals momentum that we have, the pipeline momentum we have, really gives us a lot of confidence that definitely, that we're in the right track.
What about your recent deal that you won, Samir? It was a $73 million deal with a leading TMT company in the US as well. It's a 5-year deal. Now, how do you expect that to scale up? Do we see meaningful contributions coming in from this year, or do you see that happening over a period of time?
It's a great question. So I think we think the deal we just announced will scale up in the course of the year. The work has already started on the program. We'll probably have marginal uplift in Q1, but significant uplift in Q2, but a full uplift by Q3. Maybe by September, October timeframe, we'll be fully ramped up on the deal. So it is very much in the play for the ramp up in the coming year. And like I said, that deal has an integral part of the differentiation is AI. So the customer has really commissioned Sonata to really drive platform level AI differentiation, because that platform is what they sell to their B2B clients. So it's an integral part of their service offering for their customers.
For the other domestic business, which is, the hardware reselling sort of a business, I believe there has been a change in strategy with Microsoft, where they're prioritizing direct sales to large enterprise clients. Is that true? And if yes, will it not have negative implications for your business?
So we work with multiple OEMs.
Yes.
Microsoft, of course, is a significant part of our strategy. So that business has grown for many years now in mid-teens growth from a gross contribution perspective. As you know, we don't calibrate our revenue there, but we calibrate our gross contribution. So we expect that will be the performance even in this year. As long as the market holds up, we think we'll be around mid-teens, around about that growth in the coming year as well. We're very confident of that. Now, each OEM has different incentive models, different plans for the coming year, and we're calibrating to that. We're not overtly concerned about that. I think as the OEMs calibrate their plans, their incentive model will align to that. Our strategy has changed, not vis-a-vis the OEMs, but our strategy has changed that we have now added 3-4 service offerings in the mix. So, for example, we launched, I think a couple of quarters back, our Security Operations Center, SOC, which is really an integral part of our offering from a local domestic market perspective. And also we have added a layer of AI co-pilot implementation and AI implementation for our customers as we do this reselling work. So that's an additional layer that we have added from our strategy perspective.
One final question, Samir, your cash on the books has increased. Now you've gone past 700 crores. What do you plan on doing with that? Is there an inorganic growth opportunity that is coming up, or do you plan on rewarding your shareholders with a buyback, some dividend? What do you plan on doing with that?
So we just announced a dividend. You might have seen recently. So we just announced the board has recommended the dividend. It of course will go to the AGM, but the board has recommended the dividend in the most recent board meeting. I think our strategy is very clear that based on the fact that we are positioning ourselves as a modernization engineering company, we are in the market looking for assets. It's the right asset for Sonata, and if we find the right asset, we'll put the cash to good use. But right now, the valuations are overheated. So the moment market cools off a bit and we find the right property, we'll not be shy to take a decision on M&A as well. Quant acquisition, as you know, was done about 2 years back. That has worked very, very well for us. It's a highly accretive acquisition of Sonata. So we'll take calibrated decisions and pull off another one if we find the right property.
Thank you very much, Mr. Dheer, for joining in. Always great chatting and getting your perspective. We'll get into a break on that note. On the other side, Somal Mehta of Mirae Asset Sharekhan will join in with his top trading bets.
Welcome back. The index remains where it was, but there are plenty of movers. Then counting down to results from Bharat Forge, it'll be reporting results during market hours. We'll be hearing from the management as well during the course of the day. So Bharat Forge is a stock that you will have to watch out for. Still 0.5% lower on Bharat Forge. Asian Paints too continues to remain on the edge. There is no significant movement in the stock there as well ahead of its results announcements. Mind you, the stock is down almost 30% from the top is Asian Paints. So management commentary, volume growth, there are plenty of factors to watch out for when it comes to Asian Paints as well. The other one though, among the top Nifty losers, Tata Consumer is one of them, 2.5% lower, and Eternal, that too is trading with losses of around 2.5% in today's session. But time for a quick chart check. Saumil Mehta of Mirae Asset Share Khan is joining in for a quick technical check and some trading ideas as well. Saumil, good morning. Thank you for joining in. Where the index remains in consolidation mode, but which among the two, with the Nifty or the Nifty Bank, do you think is a better trading idea? And of course, share your recommendations among specific stocks as well.
I think we are still in the range, and Nifty has a very narrow range now. It has become a very narrow range. Previously, it was 24,000 and 24,600. Now it's become 24,200 and 24,600. So till the time we don't decisively cross about 24,600, I think we will still remain in this range for some time. There is a lot of uncertainty at this point of time, and the VIX is at very high levels, 18.36 at the moment. So I think Nifty is still going to be range bound, but Bank Nifty looks all right to me. It has taken support at 20 daily moving average, and the support is at 53,930. That will be a very strong support for Bank Nifty, and I'll be expecting a good move on the upside till 56,000 levels in Bank Nifty. So Bank Nifty will be a good bet rather than Nifty. Now, the two stocks which I would like to go with the large cap till the time we don't decisively cross the higher end of the range. My first bet would be, my first stock would be L&T, and L&T stop loss is 3270 and the target is 3600. It has broken out of a small bullish flag pattern. Momentum indicators has given a fresh buy signal, and I think a good rally on the upside is possible till the previous swing high, which is around 3600. The second stock which I like here is Titan. Titan, again, high top, high bottom formation on the hourly charts. Fresh momentum buy signal. Stop loss would be 3300 and the targets would be 3650.
Thank you very much for joining in, Saumil. Just keep your eye out on Route Mobile, because Route Mobile came out with numbers yesterday post-market hours, and the first dip on Route Mobile was in the red. The stock opened with a cut of 2%, but has managed to recover. Well, numbers are muted, but remember the stock had fallen so much. This year, Route Mobile is down 30%. From its 52-week high, it's down 50%. And the reason for that, why the stock corrected so much, is that growth slowed down. You know, that annual growth picture will come up for you on your screen. When Route Mobile was getting re-rated, it was growing at 40, 50, 70%. Then in the last 2 years, growth started slowing down because in the international market, there were some headwinds. And secondly, there was a lot of shift from the traditional SMS channel to the OTT channel, right? Your WhatsApp. Right? A lot of brands are communicating with you via WhatsApp rather than SMS. So this entire transition created a bit of a flux for these companies. So which is why Route Mobile itself also corrected. Now coming to Q4 performance, softish quarter, revenues down 0.7% on a quarter-on-quarter basis. Year-on-year, it's up 15.5%. And if you remember what the company had targeted before, they had said a 15% kind of revenue growth for 3 years. But this year, they didn't manage to do that. This year, they ended with a growth of about 13.7%. They also said our endeavor is that Q4 will be better than Q3. That also didn't play out. Both Q4 and Q3 is similar with a 15.5% growth. Margins have contracted for the company on a quarter-on-quarter basis. Gross margins, so that's put pressure on the EBITDA margin. And also, if you look at the PAT, our profits are significantly down, 30% lower on a quarter-on-quarter basis, though there was an exceptional item. But the problem is growth for the company, because growth has slowed down for all these CPaaS kind of companies, whether it's Route Mobile or Tanla. So the stocks have been under pressure, but today it's seeing a recovery.
Beaten down names, taking a bit of some buying interest coming in at lower levels, right? For a company like Route Mobile, almost 2% higher now, had surged past levels of 1,000, but has cooled off from those levels, still significantly off the lows of the day. The other stock doing well today is Tata Motors. Was doing well yesterday, continuing that trend in today's session as well, and that is on the back of a potential trade deal that might take place not between India and the US, but between the UK and the US, and that is a New York Times report from earlier in the day. Sudarshan is here to tell us more on that and the likely implications for Tata Motors. Sudarshan.
So Tata Motors is top Nifty gainer, and it's up almost 3% ahead of likely trade deal between the US and UK. So today morning, US President Donald Trump has announced that he would be holding the press conference to announce a trade deal with one of the important nations, or say one of the friendly nations. Now, after that, New York Times had come out with a report saying that that trade deal might happen between the US and the United Kingdom. So what did that report say? It says that right now, details are not out. We'll have to see if both the countries sign the deal or they announce the framework for the agreement. Now, why this would be positive for Tata Motors if the deal is announced? So, JLR forms nearly 1/3 of North America's sales. Also, JLR contributes almost 70% to Tata Motors' consolidated revenue. And if this deal is announced, it would be positive for JLR to maintain the guided EBIT margin that company had given for FY25. So we'll have to wait till evening to see if the Trump announces the deal with UK.
All right, Darshan, thanks a lot for that. Top gainer on the Nifty yesterday, among the top gainers in today's session as well. But the top gainer in the broader market space on the Nifty 500, though, is Niva Bupa, and that is on the back of its quarterly results, still holding on to gains of around 10%. At one point was up almost 13 to 14. Vamakshi is here with more details on the results and what brokerages have to say on Niva Bupa. Vamakshi.
Well, absolutely, Hormaz. The numbers that have come through from Niva Bupa are much better than what the street was penciling in. When you look at the net earned premium, that saw an uptick of almost 25%, coming in at 1,530 odd crores. The underwriting profit, however, saw a downtick of almost 12%, posting a profit of almost 58 crores. The combined ratio, on the other hand, was up 338 basis points, and therefore, when we look at how the company has fared as compared to analyst expectations, it was much better. Operating profit was down 43%, but the net profit surged higher by almost 31%. There's a note that came in from Motilal Oswal, and they say that the performance of the company was very strong in the fourth quarter. They also have a target price of 100 rupees per share, and they have a buy rating on this call. They say that the strong underwriting performance boosted the company's net profit, and they believe that given the kind of strong performance that the company has posted in the fourth quarter, they've gone ahead and upgraded their gap estimates. So therefore, good set of numbers, better than expectations. Positive note coming in from Motilal Oswal. The stock resultantly is higher in trade.
Big mover. Thank you very much for that. Get into a break. On the other side, Prateek Parekh from Nuvama Group will join in to talk about the markets. Welcome back. You're watching Trading Hour, and as promised, let's invite Prateek Parekh from Nuvama Group to join in to discuss the market fundamentals and the way markets have snapped back, especially since the start of April. Prateek, you've been tracking this SMID rally very closely, the small and mid-cap rally, and you point out that the small and mid-caps have recovered almost 11% from their February 2025 lows, which means they have retraced 1/3 of the drawdown since the September 2024 peak. The fall from September all the way down to February, we've recovered 1/3 of that with that 11% up move. How would you classify and categorize this recovery? Is it a dead cat bounce? Is it just a rally we should ignore? Or do you think it has more legs?
Yeah, thanks, Rima, for having me over. It's always a pleasure being on the show. I think if you look at the mid-cap bounce of sorts per se, I think the main driver of the bounce so far is owing to the liquidity easing. RBI's liquidity easing coupled with dollar weakness has certainly lifted sentiments of sorts per se. But nonetheless, I think where the concerns still remain or loom large, I think is on the growth and valuations part. First is on growth. Growth, what we are seeing is clearly global uncertainties have increased. I mean, that goes without saying. But even on the domestic front, my worry is that a lot of high frequency data is slowing down. For example, credit growth continues to remain in the soft lane. Further, some of the stronger pockets of the economy, especially the urban part, like real estate, PV sales, electricity generation, all of them are moving much lower. So from a growth standpoint, if I look at it, dynamics has only worsened since February till now. And valuations, they still remain elevated. Now, if we go by history, what we observe is that liquidity does help provide a temporary calm, but for sustained easing, it is very critical that this liquidity trickles down to credit improvement and overall top line and earnings growth. If it fails so, then this rally for it to sustain will be difficult because valuations are still high, earnings are not coming through, and margin levers are exhausted per se, Rima. So we at least think that this is a rally to be a bit more cautious about rather than be very aggressively positioned for a next leg ahead.
Pratik, good morning. Thank you for joining in. So by this thesis, do you expect any potential negative trigger to cause a bigger drawdown within the small caps and the mid caps, considering the recovery that they have seen? Because the large caps may have recovered slightly, but not as much as the broader markets have.
Yeah. So yeah, I think it depends on which point you take as a recovery per se, Hormaz. So if you take from the peak of September, I think the large cap drawdown is lesser. But yes, from bottom, mid caps have bounced a lot because they cut it also a lot more. But I think the main trigger for potential drawdown further accelerating in mid caps can come from two or three factors. A big drawdown can come if there is some big global Six Sigma event that happens and there's a global risk off, then yes, I mean, risk appetite across the world, including India, will be hampered. But I think from a domestic standpoint, I think drawdown or time correction, I mean, only time will tell. But I think markets can remain weak owing to growth outlook because earnings estimates are still in mid-teens, whereas the current momentum is in mid-single digits. Somewhere, as and when if growth outlook doesn't improve, then even that itself can be a catalyst for at least mid caps to have a leg down per se, Hamas. And it's not like valuations are very cheap. Either we get very large rate cuts to offset the current growth downturn and revive the growth back up, or markets time and potentially in nominal terms also correct to make it attractive of sorts per se on Mars. Until then, we will mostly be having a cautious outlook of sorts.
Pratik, is there any sector which you're most bullish about? If you had to pick one sector where you've got the highest conviction right now to reward shareholders, which one would it be?
See, I think that is in some sense difficult, but if I have to pick a sector, I think where valuations are on your side and also earnings are not overly high, I think it lies in the banking space. Private banks, insurance, even some of the NBFCs are the ones where we think there is a very meaningful value, where obviously there can be even risk over there as well. But at least from a 1 to 3 year perspective, this is a space where we think the maximum value lies. Because this is a space where valuations are not very expensive and companies do have cost levers to offset the potential downturn if it comes through of sorts per se.
I was just going through your top picks based on your RRR framework, Pratik, and what catches my eye within the rewarders segment is Petronet LNG, Sun TV, Mahanagar Gas, where they may have recovered from the lows over the last 6 to 7 months, but their longer term returns are, well, nothing significant to write home about. What's driving your bullishness on names like these, which may have not delivered significantly over the longer term?
Yeah, so I'll just give a brief about the framework. So the RRR framework that we have in our portfolio for selecting mid-cap stocks essentially has three parts. One is what we call as restructurers. These are turnaround stories where currently earnings are depressed, but we think things should improve. The second is reinvestors. These are the consistent compounders. Our valuations are high, but companies have had a phenomenal track record of delivering very good performance and very good execution. The third category is rewarders. These are essentially cash cows where you're not buying them for a big upside of sorts per se, but these are very high dividend yielding companies and with potential optionality of spin-offs, which can be rewarding for investors. So these are companies which you can probably assume as cash proxies in a portfolio, and it's important to have a mix of all of them. In these companies, at least we personally feel downside to an extent is limited, and reasonably good dividend yield should at least help in case if you have a volatile environment of sorts per se or mass.
Right. And the other one, a segment that I wanted to speak to you about, Prateek, is pharma. There is still a lot of uncertainty with regards to whether there would be tariffs on the segment, whether there would not be tariffs on the segment. We start seeing numbers from pharma companies starting today with Biocon coming out with results. I see a couple of pharma names in your top picks as well, Ajanta Pharma being one of them. Where do you position yourself in a sector like this, which has a lot of uncertainty to tackle with, and now with those executive orders being signed in the US to encourage domestic production as well? What do you do with pharma? And in that too, considering it's as wide a basket as it is, you'd go with generics or you go with large cap, mid cap? What do you bet on?
Yeah, again, that's a great question, Hormaz, and I think it's one of the more difficult ones to answer. Pharma currently in our large cap portfolio is an overweight. And our call over there is precisely based on its defensive nature characteristics, reasonably good cash flows, and the improved capital allocation that we have seen across companies in the space. Obviously, if you do have tariffs coming through, and companies facing higher cost of production, then yes, I mean, it is a setback and you will need to reassess them. But nonetheless, at least within pharma, the basket, as you rightly said, is quite wide. Where one can help or position themselves is, get into those pharma companies which are more domestic oriented or which have a higher share of emerging markets. In these space, at least, which we think the risk is limited, or have a specialty pharma company which is focusing moving up the value chain and where a lot of production can be done in US without weighing significantly on margins. So I think from that perspective, pharma, yes, it's a defensive nature and risks are rising. But within the space, there are reasonably good companies which you can purchase and hedge yourself against that risk by buying into either domestic oriented stories or emerging market oriented stories per se on Mars.
Thank you very much. Enlightening conversation, Prateek, as always. We will get into a break, but there are so many earnings we're awaiting today. That's L&T, Asian Paints, Titan, just a few of the large ones. We'll come back and get you the expectations on these.
Welcome back. As we mentioned at the start of the show, it is the day of sector leaders reporting results, L&T being one of them, and Vivek is here to tell us what the street is expecting from L&T. Vivek.
Well, that's right. Capital goods, infra major L&T will report its Q4 results today. What is it that the street knows? What is it that the street is baking in? Number one, the street is expecting the company to go ahead and comfortably outpace the order inflow guidance that it had given at the start of the year. Along with that, also expectations are that the company should be able to go ahead and beat the top-line growth guidance that it had given. What is it that the street is a little iffy about? The core margin guidance that the company had given at 8.25 for the full year. Will that be reached or will that be achieved? Because the implied ask rate for for Q4 remains quite high. Let's have a look at the numbers themselves. What is it that the markets are looking for? Revenue seen higher by 16% on a year-on-year basis. EBITDA seen higher by almost 16%. Margins, this is the consolidated margins that you're talking about, seen flattish, 10.7 versus 10.7, and profitability seen higher by close to 14% on a year-on-year basis. Again, for the company to go ahead and comfortably outpace the order inflow, remember, at the end of Q3, we had reported that the company had received an order or was selected as the lowest bidder for an order in the vicinity of almost $4 to $4.5 billion, and this is from Qatar Energy LNG. And if this particular order company recognizes it in Q4 itself, then definitely the company will outpace what the street is anticipating and also the order inflow guidance that they had given at the start of the year. Now, what is it that Goldman Sachs is saying? Goldman Sachs is saying company will beat the guidance both on revenue and order inflow. They are expecting a 30 basis points year-on-year improvement in the core margins in Q4. And number one, what is it that the street will keep an eye out for? Order inflow guidance for FY26. Remember, high base of FY24, company beating that in FY25. Can the company go ahead and go above that as far as FY26 is concerned? And all eyes on margin trajectory. We are talking about the core margins, whether the company can go ahead and meaningfully and materially improve that in FY26.
Got that. Thank you very much for that. Asian Paints will be revealing the Q4 numbers too. Mangalam joins in with the numbers. Expectations, sorry.
Well, they're muted expectations for Asian Paints because of the weakness that we've seen in the sector and the company at large over the last couple of quarters on account of competitive intensity along with, overall weak consumer demand too. What is it that the street is working with? Just flattish revenue growth, 0.05% decline actually. 8675 crores should be the top line this time around, but the EBITDA would actually decline by about 7%. So the street is working with margins of almost a 18.2% mark versus 19.4%, and that's largely because the company has said that their cost of sales has increased and the product mix has become, slightly weaker or towards the inferior lower margin products itself. And as a result of which, the net profit declines by about 13.5%. Decorative paint volumes are expected to grow 4 to 5%, but realizations will be absolutely flat because of weaker product mix and also the company giving some sort of trade discounts, etc., that may impact their overall margins. Consumer sentiment, market share, and impact of competition is something that we'll be tracking for Asian Paints fairly closely.
We'll keep an eye out on Asian Paints, but what about Titan, Mangalam? Numbers out later this evening?
Well, for Titan, the important thing is that we've already gotten their fourth quarter update, and the street knows that the standalone revenue of the company will grow 25%. This is X of all the bullion sales that they do. Jewelry business will grow 24% on a high base, and that would be led by gold jewelry, which grows 27%. Gold coins itself grew by about 65%. So all in all, overall revenue grows 16%. EBITDA grows 19%, which implies flat margins at around that 10% mark itself, which is lower than the company's overall, margin guidance of around 11 to 12% mark itself. But again, the net profit likely to grow by about 6.5% for Titan. Here too, the trajectory of gold prices, traction on studded, and more importantly, perhaps a management leadership change announcement after CK Venkatraman's retirement is something we'll be watching out for very closely.
Indeed, Mangalam, we'll keep an eye out on this. The business update already out for Titan, as he was highlighting. 1.75% higher for Titan ahead of the results announcement. By the way, one of Titan's peers is also reporting results today, and that has been a stock that has been in the news. Kalyan Jewellers is the one coming out with numbers later this evening, and we'll keep an eye out on that as well. If you pull up Kalyan Jewellers and see how the stock is doing, well, flat, as flat can be, awaiting numbers. So counting down to a lot of these big numbers, be it Asian Paints, L&T, Titan, you keep an eye out on them. And of course, Apar Industries has now moved to the highest point of the day. Now is the top gainer on the Nifty 500, 10% higher now on Apar Industries. So good going for that stock. And the other one that has moved higher is Inventurous Knowledge Solutions, IKS, and that too now is up 6.5% as we speak. It's been a mover over the last few minutes in today's. There you can see 6.5% higher for IKS. So good going for that stock as well. Call time on this edition.
There's one more stock, actually Sonata Software. Remember when we were doing the interaction, the stock was in the red. It was down about, I think, 1 to 2%. Now it's in the green. So post the interview where the management said that they will come back into growth in Q1, that's the subsequent quarter. Revenues declined on expected lines in Q4 because of a large tech client of theirs which had a ramp down. So the management said they were expecting it, but things will recover in Q1, and that's helped the stock claw back some of its losses. Okay, now we'll call time on the show.
We'll indeed do that from Reema, me and the team that put the show together. Thank you for watching. Halftime report on the other side.